If you had told anyone in 2015, an economist, a journalist, a guy drinking espresso in a Roman piazza, that Italy would one day be the fastest-growing major economy in Europe, they would have spit that espresso right back into the cup. Italy? Growing? Growing faster than Germany? Growing faster than France? Come on. This is the country that has inspired entire university lectures titled, "What Went Wrong in Italy?" And yet, here we are. Since 2019, Italy's GDP has grown roughly 3.8 to 4.2%, depending on the dataset. That's twice France, 5 times Germany, and light years ahead of the UK's near-zero recovery. Inflation? Also lower. Debt markets? Surprisingly calm. Prime Minister Giorgia Meloni? Getting credit abroad as if she were suddenly the CEO of Italia Incorporated. So what on earth is going on? Well, before we pop the Prosecco, let's slow down. Because the real story of Italy's economic revival is messy, contradictory, and, frankly, more interesting than the headlines. It's a story about old debts, new subsidies, super-rich migrants, home renovation mania, and a country that has mastered the art of looking stable right up until the moment it isn't. And to understand the present, we need to go back, way back, to when Italy first set the economic house on fire. Italy's modern economic troubles trace back to the 1980s, yes, the decade of big hair, bigger shoulder pads, and even bigger government borrowing. For a brief, shimmering moment, Italy looked like the star of Europe. By 1987, Italy triumphantly declared it had overtaken the UK in GDP per capita. The newspapers called it il sorpasso, the overtaking. Italians were so proud they practically invented the victory lap. But here's the problem, a big chunk of that miracle was statistical smoke and fiscal steroids. In 1986, Italy's GDP magically jumped 18%, not because Italians suddenly produced 18% more value, but because the statistical agency decided to include more of the black market in the GDP numbers. That alone should have been a warning sign. But the real disaster was debt. Between 1980 and 1994, Italy's government debt skyrocketed from 59% of GDP to 123%, more than double France and Germany. This wasn't investment debt. This wasn't build the future debt. This was paper over political dysfunction debt. And the bill came due fast. By 1990, Italy's debt servicing costs hit 10% of GDP. Just to grasp how insane that is, 10% of GDP is 5 times a NATO defense budget, or more than Italy spends on public healthcare, just to pay interest. Even today, Italy still spends about 4% of GDP servicing old debt, double the OECD average. In other words, Italy isn't just carrying a debt burden, it's dragging around the economic equivalent of a 300-pound barbell tied to its ankle. Italy responded to this crisis the way governments always do, they cut spending. Hard. If you strip out interest payments, Italy has run some of the biggest primary budget surpluses in Europe for decades. That means Italians have endured smaller public services, lower investment, shrinking welfare support. All for the promise that one day this would finally reduce the debt burden. It didn't. Growth stagnated. Productivity flatlined. Young workers fled. Italy basically spent 25 years standing still while paying through the nose for mistakes made 40 years earlier. So yes, Italy's recent economic surge is shocking. It's like seeing your slowest friend suddenly run a marathon. Your first reaction isn't admiration, it's suspicion. Which brings us to the present day. Let's talk about what everyone is celebrating. Since the end of 2019, Italy's economy has grown 4.2%, crushing the UK 1%, France 1.9%, and Germany 0.1%. Italy's inflation has fallen to 0.75%, one of the lowest in Europe. Germany is at 2.5%, France at 2.9%. Italy's debt ratio fell from 155% in 2020 to 137% in 2023, which sounds miraculous until you realize inflation did half the work. Italian exports rose 5% in 2023, driven by its status as Europe's #2 manufacturing powerhouse. Tourism has roared back, and in a country like Italy, tourism is basically a shadow currency. So is Italy actually fixing itself? Not so fast. Because once you dig beneath the surface, you find that Italy's growth is built on something very Italian, a stunningly generous subsidy that turned the entire country into one giant construction site. In 2020, during the pandemic, Italy invented what might be the most generous home renovation subsidy in the history of modern economics. It was called Superbonus 110. And it did exactly what the name suggests. If you renovated your home for energy efficiency, the government reimbursed 100% of the cost, plus 10% extra. Yes, Italy literally paid people more than they spent. Imagine walking into Home Depot, buying $50,000 worth of insulation and solar panels, and the government says, "Here's $55,000. Great job." Unsurprisingly, Italians renovated everything that wasn't nailed down. Home construction exploded. Builders couldn't keep up. Economists now estimate that 2/3 of Italy's post-pandemic growth came from renovation subsidies. This wasn't growth, it was state-funded adrenaline. But adrenaline wears off. And the bill does not. Italy didn't have the money for this program, so it borrowed. A lot. Italy already had the second highest public debt in Europe before the subsidy. But after Superbonus? The EU believes Italy will exceed 140% debt to GDP and may overtake Greece by 2028. And here's where the illusion becomes dangerous: the growth is temporary. The debt is permanent. The inflation effect is real. And the structural problems, the ones killing Italy's long-term prospects, haven't improved at all. The Italian government itself admitted the Superbonus had a devastating impact on public finances. So Italy now faces a dilemma: keep the subsidy and drown in debt, or kill the subsidy and kill the growth. Meloni already cut it from 110% to 70%, but she hasn't ended it, because hundreds of thousands of Italian homeowners already began renovations assuming the state would foot the bill. Once again, Italy is trapped by its own political promises. And here's the second unexpected plot twist. While one part of Italy is funded by government subsidies, another part is being fueled by rich foreigners fleeing high taxes. Italy introduced a €100,000 flat tax for the wealthy in 2017. In 2025 they doubled it to €200,000 for new arrivals, not to discourage them, but because the demand was still insane. The results? Italy is expected to attract 3,600 new millionaires, bringing an estimated $21 billion in private capital. Its ranking as a millionaire magnet jumped from 11th in 2023 to 3rd in 2025, beating Singapore, Switzerland, and Australia. In Milan, real estate prices have surged 49% since the flat tax was introduced, compared to just 10.9% in other major Italian cities. Lake Como has become a billionaire playground, demand so high that prices rose double digits in just 5 years. On paper, this sounds great: money flowing in, investment rising, glamorous weddings pumping millions into Venice's economy. But this prosperity is hyper-localized, wildly unequal, and doing nothing to fix Italy's low wages, low productivity, or youth unemployment. Rich foreigners aren't required to invest in Italy at all. They can literally park their wealth tax-free on Italian soil, drink wine, buy a villa, and never contribute meaningfully to the economy. The Italian Court of Auditors warned that the scheme risks turning Italy into a tax haven. So Italy now has two economies, one built on subsidy-fueled construction, another built on luxury real estate for the global elite. Neither solves the real problems. Italy's economic core issues are still exactly where they were 10, 20, even 30 years ago. 4 out of 5 young Italians want to leave the country. Hundreds of thousands already have. This is a brain drain crisis. Italian youth unemployment hovers around 20 to 25%. 2/3 of young adults still live with their parents, not out of cultural preference, but economic necessity. Per-worker productivity has barely moved since the late 1990s. Billions in lost revenue every year. A government eternally broke, eternally borrowing. Italy has one of the lowest birth rates in the world. No economy can grow when its future workforce is disappearing. So yes, Italy is growing. But it's not real, sustainable, structural growth. It's what happens when you hand out massive subsidies, import very wealthy foreigners, ride a post-COVID wave, and get lucky with energy prices. This is not a miracle. It's momentum created by external forces, and when those forces shift, the trajectory might flip with terrifying speed. Italy looks like a comeback story. But underneath the glossy numbers, the economy rests on foundations that are, how do I say this politely, one stiff breeze away from collapse. Let's start with the most uncomfortable truth. Think of Italy's economy as a 400-year-old cathedral. Impressive, iconic, awe-inspiring, but also quietly held together by scaffolding. That scaffolding is the ECB. For years, the European Central Bank has been buying up Italian government bonds, directly and indirectly, ensuring that Italy's enormous debt remains serviceable. Not because Italy's fundamentals are strong, but because the alternative, Italy defaulting, would blow a hole in the Eurozone big enough to swallow Brussels. This is why the spread between Italian and German bonds, a key indicator of market confidence, has fallen to its lowest level since 2016, excluding the pandemic period here. The markets are not saying, "We believe in Italy." They're saying, "We believe the Europeans won't let Italy fail." Italy is too big to save, too big to fail, and too essential to the Eurozone's political identity. That is not investor confidence. That is geopolitical hostage-taking. Let's revisit the main source of Italy's recent economic boom, the Superbonus 110%. A policy so generous it could only have been invented in a pandemic and maintained by politicians terrified of angry homeowners. Economists estimate 2/3 of Italy's growth since 2020 comes from renovation subsidies, not organic productivity. And Meloni's government has already admitted the scheme has had a devastating impact on public finances. When the program is fully wound down, and it will be, growth evaporates overnight. This isn't controversial. It's arithmetic. Imagine if America's entire GDP boost after COVID came not from tech, manufacturing, or productivity, but because the government paid everyone to remodel their kitchen. Once the subsidies stop, the boom stops. Italy is living that scenario in real time. And the debt? The EU expects Italy's debt to GDP to climb past 140%, possibly overtaking Greece. Not a ranking you want to win. Meanwhile, Italy is running two completely separate economies. Economy A, Subsidy Italy. A country of slow wage growth, high youth unemployment, stagnant productivity, and businesses suffocating under bureaucracy. Economy B, Billionaire Italy. A country of 20 million euro villas on Lake Como, flat-tax millionaires, luxury hotels, and global elites parking their assets tax-free. These two economies barely touch each other. Italy is attracting 3,600 high-net-worth individuals, bringing an estimated $21 billion in capital. Real estate in Milan is up 49% since the flat tax was introduced. But none of this wealth is required to reach the real economy. Italy's flat tax system explicitly does not require investment, charity, hiring, or economic participation. You can literally pay 100,000 euros a year, live in a villa, and contribute nothing. This creates a strange dynamic: prices rise. Wages do not. Young Italians get locked out. Wealth pools in elite enclaves. And the rest of the country watches from behind the glass. This is not inclusive growth. It's a luxury import. Even the Italian Court of Auditors warned the program risks turning Italy into a tax haven. A beautiful, Renaissance-themed tax haven, but a tax haven nonetheless. Italy has one of the lowest birth rates on Earth. Not in Europe. On Earth. For every young Italian entering the workforce, 2 retirees are exiting it. By 2050, Italy may lose 20 to 30% of its working-age population. This is not a cyclical problem. This is structural collapse. A shrinking population means fewer taxpayers, higher pension burdens, less innovation, fewer entrepreneurs, declining domestic consumption, and massive pressure on healthcare. No amount of millionaire migration or home renovation tax credits can offset the loss of an entire generation. This is Italy's silent crisis, bigger than debt, bigger than GDP, bigger than Meloni's approval rating. It is demographic gravity. And unless birth rates recover, or immigration rises, Italy will face a slow-motion economic winter. Here's the most heartbreaking part. According to recent surveys, 4 out of 5 young Italians want to leave the country. Hundreds of thousands already have. Italy is producing talented, educated, ambitious young adults, and exporting them to Germany, the UK, Belgium, the US, and even Romania. Meanwhile, the people moving into Italy tend to be wealthy retirees, global elites, remote work millionaires, and financial nomads. Great for short-term capital flows. Disastrous for long-term innovation. Italy is losing engineers, scientists, software developers, medical graduates, and gaining crypto investors looking for a soft landing tax regime. This is not a sustainable demographic trade. This is like trading away your farm in exchange for buying a yacht. Italy's productivity has barely risen since the late 1990s. While countries like Ireland doubled productivity and Germany steadily improved, Italy flatlined. Why? Excessive bureaucracy, slow courts, underinvestment in R&D, aging workforce, and low automation. Remember that nearly half of Italians work in companies with fewer than 10 employees, the highest share in Europe except Greece. Small companies are charming. They are not globally competitive. Italy's economy is styled like a boutique. The world economy is a battlefield. Charm does not scale. Productivity does. The great question for Italy is simple: is the current boom the start of something real, or just a sugar high? Let's imagine both futures. Future 1 is the Renaissance scenario. The optimistic one. In this world, Italy phases out the Superbonus responsibly. The government reforms courts and bureaucracy. Productivity rises. Immigration offsets demographic collapse. Millionaire migrants invest, not just reside. The EU deepens its fiscal union, keeping Italy's borrowing costs low. SMEs consolidate and modernize. Tourism expands sustainably. This is the Italy people dream of, a country that finally aligns its beauty with its economic potential. But dreams, by definition, are improbable. Future 2 is the reality scenario. The more likely one. Here, what happens is predictable. Renovation subsidies end and growth collapses. Debt rises and spreads widen. ECB support becomes politically contentious. Millionaires stay in enclaves and inequality widens. Birth rates stay low and workforce shrinks. Young Italians continue to leave and innovation declines. Italy slips back into stagnation. This trajectory is not dramatic. It's slow. It's quiet. It's like watching a marble statue erode, one crack at a time, until suddenly one day it collapses. Italy's real risk is not crisis. It's permanent mediocrity. A country too beautiful to abandon, too dysfunctional to fix, too indebted to grow, too old to reinvent. Italy's real challenge is a paradox. Everything short-term looks good. GDP up. Inflation down. Tourism booming. Stocks rising. Debt stabilized. Everything long-term looks dangerous. Demographics collapsing. Productivity frozen. Youth fleeing. Debt unsustainable. Subsidies ending. Italy is living in a split-screen economy. The left side shows success. The right side shows decline. And the political class hopes the audience isn't looking at both screens at the same time. Here's the honest answer. Italy is back, just not for long. Its growth is real, but not durable. Its confidence is rising, but built on subsidies and ECB safety nets. Its wealth is growing, but captured by elites, not workers. Its future is promising, but only if it confronts problems it has ignored for 30 years. Italy is not on the verge of collapse. Italy is on the verge of choosing. Does it embrace deep reform? Or does it kick the can down the Roman road one more time? Because eventually, even beautiful countries run out of beautiful illusions.